What is up? What is up? Welcome to today's live stream. Oh my God, we've got so much to talk about today, and the topic for today's live stream couldn't have been timed any better. The main topic of the day. We're going to talk about a lot of things, but the main topic of the day is crypto in a bubble, or is it just getting started? Let me share my screen and we'll hop right in. Also, for anybody that's joining live, let me know that you could hear and see me okay. Make sure that you're clicking the like button and all that kind of stuff, so that way this live stream goes out to more people. Just go ahead, type into the comments too. Let me know that you could see me okay and hear me okay. This is maybe the third live stream that I'm doing, and I'm still getting used to all the different StreamYard stuff here. So just let me know that you could see and hear everything okay. With all that said, let me switch over my screen and we'll start talking about some crypto now. That's Sprout. Let me switch this over to crypto, and we could start to take a look at some of the action that's here. By the way, the charting service that I'm using here, it's called TradingView. And right now we're looking at a daily chart of Ethereum. So each one of these bars is representing a day's worth of price action. If I turn this off over here, you could see some of my other notes where the entry point was in Ethereum back here, and how it's progressed thus far. Now, something that you might be seeing. Oh, hey, Craig, thanks for checking in and letting me know that you could hear things loud and clear. So, and as you have questions, go ahead, type them into the chat. We'll have an open Q&A at the end, but please ask questions as we go along. So, there was a flash crash in crypto earlier today. If you look at crypto, and let me drag this over this way and turn off the annotation so it's a little bit clearer here. What we've got on the screen right here, we've got 4 charts, right? This chart down here, this is a 30-minute chart. So each one of these little bars represents 30 minutes. Over here is a daily chart. Over here is a weekly chart, and over there is a monthly chart. And the reason why I like to have all these different time frames up, it gives me a multi-time frame sense of where things are at, where we're on the most minute level, and where we are in the bigger picture. Now, this move in Ethereum today was rough, right? Like, so let's say you're back here and it's what is that? That's 2:30 in the morning, and you wake up and Ethereum's down 6% at around 5:30 or so. That's not too bad in the land of crypto. That kind of par for the course. And then later on in the morning, right, like around 9:30, all of a sudden you get this kind of down move within about an hour and change. It's down nearly 20%. Right? So that is a scary move if you are watching this stuff closely. But you can see here this bar in particular here, how much it rallied straight off the bottom there. And if we go down even lower, let's take a look at first the 5-minute chart, right? Like dropped super hard, then bounced straight off those lows. Let's go down to a 1-minute chart even, right? And you can see like it spent just about no time at all down there. It just rallied hard straight off those lows. And when we come back over here and look at the daily time frames, that's where you could start to see a little bit of the larger picture of what's happening here. So it crashed down just like we saw on the other time frames, but it came down here to this red line. That red line is the 50-day moving average. Now, if you are familiar with stocks, if you're familiar with stocks and if you trade stocks, let me know, type it into the chat. But if you are, then you are likely familiar that the 50-day moving average tends to be a spot where the major players will step in to support a stock, and in this case are also stepping in to support crypto. And you can see like how it was there for just a few minutes, and then it started to rally and rally hard. So if you were quick and Johnny on the spot, you could have gotten in at the 50-day moving average and played a move back up for about 13% in the span of just a few minutes. What makes this level more important, not just that, like, oh, it's a 50-day moving average and it's some kind of mystical line in the sand where buyers tend to step in. I also like when it tends to line up with other major support areas, and that's exactly what it happened to have right over here. So it pulled down into this level of support here. If you see that dotted line right there, I drew that as a major support level or major prior resistance that turned into support, right? So if we come back over here and I'll remove this colorful rainbow color Fibonacci retracement and extension levels temporarily. If you look back here at that dotted line, you can see how when price was up here back in May and it fell hard and it attempted to rally back, the 50-day moving average was around there. That purple line was around there. That's a 21-day exponential moving average. And price just fell and tried to rally and fell some more, and it stayed below that level. So that was creating a level of resistance. Price attempted to get above that level and it couldn't, right? So that's what creates the resistance. So we're fast forward to over here in August, price finally rallies above that prior level of resistance. So the ceiling is now becoming the new floor, right? Just like when you're walking up some stairs and you reach the top of the stairs, then what was once your ceiling now becomes your floor. Same principle. So now price is getting support around that level. You could see it testing that level multiple times over here, and then it continues higher, and then today falls, but it catches support right around that level there. So another reason to be bullish on the longer term trend, even though you have a nasty move like this. And I keep on pointing this way because my screen is actually over here, whereas I'm looking at the StreamYard thing and it's actually like should be pointing over that way. So maybe for a future live stream, I'll remember that and put the screen over there. But anyway, any questions on any of this so far? And that will keep on rolling. So I also like to zoom out even further, right? Zoom out further. See, where are we at in the weekly timeframes, right? So now each one of these bars is a week. And if I turn off the annotations and you're just looking at the weekly bar, like that, this weekly bar is kind of a non-event so far, right? It's kind of par for the course. Yes, I understand that we just started the week, really, but it's about the same size, about the same level of volatility. I'm kind of curious if we fast forward from now, right? Like, so we mark today, September 7th, and we look at this on October 7th. Well, what's the chart going to look like? Are we even going to remember this day or recognize this on that time frame? So let's take a look at the monthly. Let me see there. Oh, there's a question from Craig. Take Craig's question. Where do you start as a beginner, since this seems like a lot to digest in charting? Yeah, you know what? It can be. It can be quite a bit to digest. Like if you're brand new, like if you haven't really seen or studied charts yet, there's a few really good places that I would recommend starting. The first is with William O'Neill's book, right? This guy William O'Neill. Let me know if you heard of him. He wrote a book called How to Make Money in Stocks. Now, I know that we're looking at crypto, but the way that he started to break down charts, it applies to not just stocks, but it applies to crypto. You could use it in, like I've seen it used it in Forex, like just like the charting techniques, the different patterns, all these different kinds of things, they tend to show up in anything that tends to trade. And the reason why is because the asset can change, the people can change, the players can change, but the thing that remains the same is human psychology. All the supply and demand of the asset that you happen to be looking at. So whether we happen to be looking at Ethereum, or if I change this to a stock that I'm in, like same kind of price action, right? It's not all that different. So that's the reason why. Now let's get back over to Ethereum. That's the reason why I would recommend starting with O'Neill's book. And then there's actually another couple of books that you might want to pick up too. There's one that's written by this guy, Stan Weinstein, and it's called Secrets for Profiting in Bull and Bear Markets. If you pick it up, like you'll see this guy. He has like the 80s hair, right? But it's a fantastic book, and that book too applies very well, not just to stocks, but also in crypto. So that's where I would start. I'm coming up with a course that's going to help people that are new like yourself. That's in the works, but for now, get started with those books. All right, so let's see. Puma Highway, welcome to the live chat. All right, got more people coming in. Let me know too if this is a good time. I wanted to start after the close because I heard from previous live stream that after the market closes, is a better time for everybody. So please let me know if this time works better for you, if there's some other time that's even better than this. Yeah, so you have each of these bars, right? And so like this bar, the volatility is very similar to the volatility that Ethereum has gone through. So it's kind of par for the course. You look at the uptrend here, like it's still making a series of prices, making a series of higher highs and higher lows. It's still in an uptrend. You look at the monthly chart over here, right? And Ethereum consolidated this move, right? From back here when it finally broke out. Let's take our little measuring tool over here, right? So from November of last year, it ran 700%. It deserves a little bit of time off, right? I think so. And it only took what? Well, 2 months off. The third month it starts to rally. Yeah, I think that it's earned a little bit of consolidation time. So it's pulled back. Similar action in Bitcoin, in one of our favorites, Doge, or how I was saying doggy coin forever. I still like to call it doggy coin. I just think that it's fun to say and to look at. That, and here's another one that I'm interested in. Here, ICP USD, another one that pulled back hard today. But you can see too that so many of these have rallied hard off the lows. Well, turn this off here. And you could see the major levels of support and resistance coming from back here, right? So let me take this off just to make it a little bit clearer for a moment. And you could see too, right? Like it rallied, it found resistance over here, attempted to rally above it, finally breaks out over here on heavy volume, and then it consolidates between this next level of resistance, and that's kind of where it's at right now. And now it's back into that range. It's just bouncing between support and resistance. So is crypto a bubble? Is it just getting started? Honestly, I think it depends on your time frame, right? Like, so if you are somebody that is a short-term swing trader or a day trader, then yeah, I think that you're probably going to get some choppiness for a while. If you are longer term, and for crypto, for me, I'm looking much longer term, right? Like my plan is to hopefully hold like Bitcoin and Ethereum for a year or longer. And so most of my focus is on the weekly timeframes, on the monthly timeframes, and just simply too, like the way that cryptocurrencies tend to move with these ginormous spikes, major volatility, it makes it significantly more challenging to manage on the lower time frames, at least for me. When it comes to stocks, there's a lot of automation that we could do as far as placing advanced orders. There's a broker that I particularly like, Thinkorswim, where I have my larger accounts in and am able to set up different types of orders. Like if orders that say if the stock does X, then do Y and Z, right? And so you're marrying trades. They're actually called one cancels the other types of orders. Yeah, I think that it's fantastic. But anyway, that's kind of where we stand in crypto. I'll leave off with just flipping back through these monthly timeframes. Like you could see that it's still digesting this move from earlier in the year or towards the end of last year. Finally rallied above the 2017 highs, and now it's just consolidating. Personally, I think crypto has a lot more room to run. And if you haven't seen the interview that I did with, hopefully I don't want to butcher the poor man's name, but the brilliant guy here. Let me find the actual YouTube video that we did here. Just searching. And here it is. No, I thought I had it, but there it is. Yeah, Sam Chawinski. This right here, the perfect storm for Bitcoin. Check this out. I will put this link in the chat for you guys to go check out that video later. Fantastic stuff. Lots of reasons why crypto, from a fundamental perspective, why crypto has, and not just Bitcoin, but all the cryptocurrencies have all the major coins anyway, have room to run from here. So definitely check that out. Lander says that he's buying Riot puts. Let's take a look at Riot. So if you're buying puts today, right? So here's part of what I'm seeing, right? Like, so down day, obviously, volume increasing over here. So you're basically betting that Riot will break the support that it's had from back here, right? So Riot rallied back above the 50-day moving average and then traded around over here and created that floor that we were talking about earlier, where price when price rallies, right, like it's walking up the stairs, and then that ceiling that it had becomes a new floor. That's basically what you have around here, around the $30 level. That's where that is. So by buying puts, you're basically saying that you think that Riot will continue to break down. It very well might. For since you bought the puts, I hope that it works out. But that's essentially what you're saying. And if it doesn't, then you're kind of trading in this range here. Right? Like you could actually extend this line back even further to where it's been trading around for a while. In fact, that line can go back even further, and I would venture to call this not a minor level of resistance, but a major level of resistance right there. So it broke down, attempted to rally above this, but failed multiple times, and now it has this minor level of support. It's a decent thesis that you have, Lander. Yeah, decent thesis. But I would just be aware that, yeah, that it could rally and you might be in this chop zone for a little bit. Just my 2 cents. All right, so let's move on. Right, let's see, what else do we have for today? Oh, we were going to talk about recent trades. Recent trades. We were going to talk about SPT. Now I'll make a little banner on the fly. SPT. We're going to talk about Paycom, and we're going to talk about COOP. So recent trades in these three names. All right, so let's take a look at SPT. See that there's like a ton of annotations on this, and it might scare some people. So I'll walk you through it. What I have right here, right, like, so the first thing that I do when I'm going to analyze any kind of chart is I'll take a look at the base, right? Or actually, I take that back. The first thing that I'm looking for is to see if there's some kind of an actionable pattern that I'm seeing on the chart. And it's helpful to take off all the annotations for right now. So this is kind of where I start, right? Like from a chart that looks like this, basic bar chart with a handful of moving averages. And you have volume down here. Volume is very important. And you have your relative strength line over here. And yeah, and for anybody that that's newer, that wants to learn more about this, or if you're a little further along, let's say that you have some experience under your belt and you want to learn more about this kind of stuff, we do coaching sessions every Wednesday and Saturday, and we're coaching for 4 hours a week, live, myself and my other coach, Stu. We're in our Discord chat, and we're doing live coaching sessions on all this stuff. In fact, our next one is tomorrow after the close. So go check that out. You could go to marrowwealth.com and sign up. But anyway, back to this. So what I saw over here, right? In SPT, I saw this consolidation, right? So prices moving sideways, and it almost looks like, for those of you that are familiar, well, this is starting to look like maybe an inverted head and shoulders, right? If I take this off over here, I have it labeled as just a fourth stage base, but we could even draw out the inverted head and shoulders over here. So it breaks out of that on earnings, on heavy volume, runs up a little bit, and consolidates on down here, low volume. And it's starting to get support at the moving averages, right? Like the moving averages are our friends. They're not like there's no magic to them, but what they do is they're basically quantifying the trend. And there are things that many other traders look at as well. So it tends to be a self-fulfilling prophecy, right? Like, oh, like it's getting support at level X. So because so many other people see this and actually use it, it can work. So when you have many things lining up, like these moving averages, like that purple line over there, and it having support around the breakout area, which was over here, and you're starting to get tightened up, that's giving you a real tight range where what I'm saying to myself is, okay, if it breaks out above here, then I'm in. And if it falls below there, then I'm out. And that was only a difference of about 5%. So when price gets to 5% gain, then I've made 1 times my risk. When it gets to a 10% gain, I've made twice my risk. 3, 4, 5% higher, right? Like, or 3, 4, 5 times higher, then that's where I'm at. So for right now, if I take this, I'm still on that. That's one of the things with trading view here, right? I don't want to move the backstop. I want to move nope, not that. I keep on grabbing the wrong things. Let me go down into the 30-minute time frame. Maybe it'll be a little bit easier. All right, so let's get rid of that. If I move, oh my goodness. All right, finally, was finally able to grab this. Right now we're at about a 24 and change, close to 25% gain on the move. And it's generated about 5 times the risk. That's how I like to look at trades. How much money am I able to make on a risk basis, right? I try to aim for trades where I can make 3, 4, 5 times as many money, because not every trade is going to work. In fact, there was somebody in the comments on one of the videos, I forget the gentleman's name, but he was asking about statistics and performance and those kind of things. And it's something that I share with members. It's in the spreadsheet here. I'll share it with you guys, but members get access to this actual spreadsheet that serves as my trading journal too. And so like there's SPT and my notes on that and what the trading plan is going to be. My other open positions right now, I've got PKI, SQ, Square, and Shop for my swing trades. And so what was I going to say? Yeah, like all the trades from this year, they're all here, and all of the like as the year has gone on, the spreadsheet has evolved too. So it just keeps on getting better and better with time. As far as how we're grading trades, notes on trades, post analysis of trades. And sizing. different statistics that I'm trading. And as far as stats go, like I actually, my batting average is under 50%. You can see right here, my batting average presently on the year after 112 trades so far, closed trades, has been 43.75%. And somebody might look at that and say like, wow, that really stinks. But the math works out because it's not just about what your batting average is. It's also about the size of your average winner and your average loser. And so because my average winner is twice what I risk, and my average loser is actually tends to be less than one R, right? Like, well, so like if I put up in that Sprout trade, right? What we talking about back here, it's rare that my loss actually goes all the way to where I set my stop loss. It often gets cut before that. That's how I'm able to have an average loser be minus 0.746 R. Right. And so the math works out, and that's how I'm able to be up a little over 57% on the year, with some major winners earlier in the year. Major winners like in DOGE and in Bitcoin and Ethereum, like locked in back in May before the initial crash. Anyway. Yeah, and so all those stats and closed trades and all that those are things that we actively discuss with members. And yeah, the idea is for everybody to learn and grow. Question from Lander. Let's put this back up. Riot mainly follows Bitcoin and stuff isn't looking that good for crypto, so I'm anticipating a drop in Bitcoin, which will cause a drop in Riot too. Yeah, it's a fine theory. I think that your thinking around it is good. Like, so if we're looking at Bitcoin again, and you're bearish on Bitcoin, and your thesis is that, okay, Bitcoin is going to fall and that's going to cause Riot then to fall, then great. Like that's a good thesis to have. And I was having a similar conversation, not about Bitcoin, but about something else, about betting size with a friend of mine, Tom, yesterday. And what the conversation had to do with sizing. And we always want to bet an amount where we can continue to play our edge and not get kicked out of the game, right? So let's say that you are absolutely certain that Bitcoin is going to roll over and die, and therefore you want to stay fully like go all in on your Riot puts. Well, the thing with the market is that even if you're extremely sure, there's always a chance that it could rally against you, right? So what we want to do is to position size in such a way where we could never lose just on one trade, right? Where we're not going to blow ourselves up. The idea is to stay in the game for as long as possible, because even with an edge like this, right? To come back to these stats, where if your batting average is less than 50, you could still come out a winner. It just comes down to your position sizing. And last week, Coach Stu gave a fantastic presentation on winning and losing streaks, right? So taking a look at your own statistics and figuring out, well, what's a likely winning streak that I might have, given that I win 43% of the time, and what's a potential losing streak that I might have, given that, right? So Uh, all important things to know, all things that we talk about inside the Mara Elite program. Yeah, so for anybody that's interested, again, just go to marawealth.com and click on. Let me log out here. You would just go to marawealth.com/membership. Click on the little, well, it's not cooperating, but you would go to the membership page and you could sign up for a membership there. Craig says, when you say locked in, you cashed out. Well, no, what do you mean exactly, Craig? I don't follow. And Lander, yeah, you're welcome, Lander. My pleasure. Glad to be able to hop on and do this for a little while. Let's see what other questions are coming in from Puma. Uh, can you sell puts on crypto? That's an interesting question. I'm not sure the answer. I believe that there are crypto ETFs. You might want to look into that, and you'd be able to potentially sell options on those. The thing with any options market is that you want to make sure that you're dealing with a liquid market. The reason why is because let's say you're right on the move, right? Like, so let's say you think that Bitcoin's going to drop, right? And let's say that it does, but the option that you're using doesn't have a very liquid market, meaning that there's not too many buyers and sellers in there. So price can move in your direction, and you might still end up losing on the trade because there's not enough liquidity. I've been in those kind of situations before, and it sucks. So make sure that there's plenty of liquidity in any kind of option that you go to trade. So with that, you might say, well, how do I know if there's a liquid market? And that's a very great question. You would look at the volume of the first. I look at the volume of the shares being traded, of the underlying, right? Like that. That's like the first clue. Like if it's a illiquid stock or ETF or whatever, then chances are it's going to have a poor options market. So liquidity there first. Then I'll look at the spread of the option. So the difference between the bid and the ask price. It should only be a few cents if the options market is liquid. And I'll take a look at the open interest as well. Yes. So for Craig's question, when I said that I locked in profits, yes. So I locked in profits in Bitcoin. I was long Bitcoin for most of this ride back here. Actually, Bitcoin I ended up selling somewhere in this neighborhood over here, and then I had switched to Litecoin. I was long Litecoin and Doge, and actually ended up selling Doge somewhere in here. I had bought it back here when Elon first started talking about it, around 4 cents, just to not really thinking too much about it, right? Like you just put it in an amount that you're comfortable with losing for fun little trades like that. And and with something that I consider a fun little trade, that's like the exception to the rule, right? Like you don't want to let too many of those into your portfolio, but decided to get in and ended up writing it up for this and locking in the profit somewhere in this neighborhood right here. I was in Disney at the time, and I started to see this crazy volatility. It's just like, yeah, you know what? Let me cash out over here, and I saw that bounce and was just like, yeah, that's enough for me, and I sold there. Similar with Litecoin, like sold right around here before I did this. Let's see, what other questions do we have? All right. Let's take a look at PAYC and COOP. PAYC is one that I had from, where did I have it? From August 23rd, and I ended up cashing out the rest of it today. Right, so this was intended to be a short-term swing trade. So again, what do I look for? What do I look for? I look for these consolidations, right? So this is a flag. You could kind of see, let me take off the Fibonacci extension, kind of done with that now. But even with this, you could see the flag. It starts to run up on heavy volume and then consolidate briefly sideways. And then it started to break out of there. And I actually wasn't very comfortable in this trade when it first started. And the reason why was because it broke out on kind of mediocre volume. When a stock breaks out, I like to see heavy volume buying. That shows that the institutions are behind the move. And it never volume didn't really pick up until over here this day. Well, that was Thursday of last week. And something else that I like to do too is I like to scale out of a trade into strength. So as the trade is, and especially for a short-term swing trade like this. So as price begins to move in my favor, as I'm making multiples of the amount that I risk, if you remember from earlier, if I'm making 1 times my risk, 2 times my risk, I like to sell into strength and then let the rest run, right? So that way I'm locking in gains along the way. So I took my first scale out over here, and then today it closed below my backstop, right? Like what I call a backstop. And the way that I find these quote unquote backstops is I'll look for support. I'll look for where price is supported, where it's made those run-ups, right? Where it finds, climbs the stairs, and then the ceiling now becomes the floor. And it fell below the floor earlier today, and so that's why I closed out that trade for a small win. Let's see, what else do we got? We've got COOP as well. Yeah, COOP actually started to gain volume last week, and today it reversed on somewhat kind of heavy volume. And it's not a good day for like it's where sellers are in control, at least for today. But this one bar by itself is not enough for me to exit the trade. I already hit my first scale out on the trade on Friday. So now my plan is going to be to raise my stops up a bit more, right? So I'm going to protect my break-even point that much more. So I'm locking in more gains, right? So I could still keep my batting average up, right? Like I could improve on that batting average, have less losses, and then hopefully, if it continues to trend higher, have larger gains as a result. All right, so that's the open trades. Now, let's take a few minutes here and answer any additional questions that you guys have. Open Q&A, any kind of trading related, anything that you have, go ahead, type it into the chat. Let me know what questions you have. I'll just scroll through here quickly and see if there's any questions from earlier that I missed. Let's see, we spoke about Riot already. Bitcoin. Yeah, everything's locked in well with Bitcoin. So we spoke about a lot today. We spoke all about crypto and Ethereum and Bitcoin, and even took a quick peek at DOGE and ICP. We spoke about some trades in stocks. We spoke about SPT, COOP, and what else did we talk about? We talked about Paycom, and we even looked at my personal playbook and stats and some of the open trades, the other open trades that I have. There's a lot in the spreadsheet. Again, this spreadsheet gets shared with members. So you guys have a game plan that is not just like different trade ideas, but you're also seeing like the rationale behind those ideas. Every trade is graded. Every trade is getting updated ahead of time, right? Like, so it's not where you're getting like some alert on your phone. It says that, oh, look, like now that Mike's in a trade, great. You're getting this. Like, I'm going to update this as soon as we hop off this live stream. And so that way you're getting plans while the market is closed, and that allows you to follow along that much easier, saves time. And the way to become a part of all this is to come over here to marwealth.com/membership. I'll put it into the chat, and you guys could go over there and have a look. Let's see, question from Craig. How do you determine stop loss, and do you always use it? Great question, Craig. Yes, I always trade with a stop loss. I think of stop losses as like brakes on a car, right? Like, you wouldn't drive a car without brakes, so why would you trade without a stop? Stops are very useful. They're like an insurance policy. Like, if I'm in any of these trades here, right? Like, let's take a look at this one in COOP. So if I don't have any stops in, and I am not looking at the charts, if I leave my computer, or let's say the broker goes down or the power goes out in the house, right? Like any kind of natural disaster might happen. Look at what's happened in Louisiana, right? Anything can happen at any time, and if we don't have some kind of a fail-safe in place and the market tanks, then we would be on the hook if the market, let's say this trade all of a sudden falls down here, right? Like something comes out that there's some major scandal, I'd be screwed, without a stop in place. But because of the stop, then if price falls over here, then I'm out, and that's it. And it's something that I don't need to worry about. I initially started trading like this back when I was trading part-time, and it's something that just works so well that I've kept it. So the way that I place stop losses, it's really determined. It's determined based on a couple of things. The initial stop loss, right? Like, so let's take those pink lines out, right? And you're just kind of dealing with where. Let's get rid of this yellow line too. Oh, you said that it's frozen. Are you able to see and hear me? Is it unfrozen? Apologize about that if we had some technical difficulties. But if you set your stop loss, right, like, so the way that I'm looking to set my stop loss, I want it to be below a level of support. So when I'm looking at this chart, before I got in over here, I was looking at this and saying, okay, where's the floor? Where's the floor? And when I did my analysis, I determined that the floor was really like right around here, right? Really right around there. And you might look at this and say, well, why not that bar? Why that bar? And I say, great question. I like to do what I call a multi-time frame analysis. You saw that earlier. Well, what I would do is, like, I'm looking at the chart over here, and then I'm popping open the 30-minute and saying, okay, where does this line up? And it lines up right below over here, right? Like, so there's like a little dipsy doodle move back there. But where has price been tested? Where has price been tested? And it actually, let me get this over here, actually lines up with the prior high way back from March. So price found resistance over here, broke through it on some volume after earnings, consolidated, and then started to break out. So I was using this former high as my stop loss for over here. Part of the reason why too was then I'm starting to look at other things like, oh, well, where does the 21-day exponential moving average look? Oh, look, it happens to be crossing right above that level right now. Great. So if price breaks out, then that would mean that what does it have to fall through in order to trigger my stop loss? So I'm looking at those different moving averages, like that little thin one is a 5 EMA, that green one is a 10 EMA, and the purple one is a 21. I'm looking at those as different levels of cushion. So if price falls, then it's got to fall through all that before triggering my stop loss. So that's a kind of a simpler way of how I'm going about setting it. There's a bit more involved. I should say that's a condensed version of how I go about setting stop losses. But yeah, if you check out the program, you'll get all this a lot more. There's other videos and boot camps that explain the stuff deeper. And again, we do meet twice a week, 4 hours every single week with our members and go through all different kinds of stuff. And you get to chat live inside Discord. So microphones are open and we're having an actual conversation, not just a chat. Are there any other questions? Getting close to the end here. I want to hop off in a moment or two. Any other questions? Give you guys a second to type them in. I'll just grab a drink of water. All right. So if there's no other questions, I want to say thank you all so much for coming. Again, for anybody that's interested in joining the Mara Elite program, just go to marawealth.com/membership. and it'll be right there. Go check it out. And I look forward to seeing you in there. All right, everybody. Thanks for joining us today. It's been great. A lot of great questions. And I'll see you next time. Take care. Much love. Peace out.